big reversal in silver. So maybe silver realizes it shouldn't be treated, or some investors realize shouldn't be treated like a commodity. Instead, if gold's not collapsing, why should I? And if we're starting to snap back, and it won't take much to snap back big time. I personally view the sell-off in silver as a major opportunity to buy. It's much like the COVID event. You go back and look at the charts then. It exploded out of there like there was, total error that it made. I think it's going a lot lower. I think we're headed for a major disastrous bear market, a cleansing event. We've had a 15-year plus bubble like we've never seen in the United States, both in terms of duration of the uptrend and two, the dimensions, multiple gains. Compare it to 23 to 29 or the mid 70 high or the dot-com high or the 2007 mortgage high. None of those bubbles that we now call bubbles in the past compare to what we have now. And it's a monetary event. It is not due to a great economy. It's due to the Fed cutting rates to effectively zero for 10 of the last 15 years. And even when they raised them to the levels that were still dirt cheap compared to the last 50 years. So basically free money. So everybody got drugged up and they bought stocks with it. The money supply growth accelerated. It always goes pretty good anyway. Every 10 years, you basically double the money supply in the US. It's probably true around the world too, Japan, Europe. So continual money degradation. And, that's reflected best in gold, the inverse of that. And our focus right now is we thought that when the gold's already been going up since 2015. Okay. In a broad context, it's still a bull. It turned bullish by our metrics in February 2016 when price got up to 1140. Its bear low had been 1050. And nothing has changed since early 2016 via our annual momentum metrics of gold to argue that it's over. Nothing. In fact, I think there's a lot more to go. And I thought one of the factors, or the key factor, to help get that acceleration phase of the bull market underway. And by that, I mean, take a look at what happened in 1979 to 1980, compare that to the prior couple of years. That was when gold accelerated upside. Silver left the earth practically. And look at the bull market that was from 2000 to 2011 in gold. Much of it occurred from 2010 to 11. And for silver, it went berserk in the final several quarters of that decade plus bull market. I think we're there again. But the factor that I wanted to see, and I thought technically was important, was to break the stock market bubble. A couple reasons. If you break the bubble, a lot of that money is not just going to get burned up in the fire. Okay, yeah, a lot of it does. It gets destroyed. But smart money or dumb money finally realizes I better get out of this thing and move somewhere else. And there are very few alternatives out there that if you look over the last couple of years that have been competing with the S&P. In fact, gold has been beating the S&P for the last several years, period, on a percentage gain basis. You go back 3 or 4 years, look where gold was, look where the S&P got to its high, measure the percent gain, gold beat it. Now, gold is starting to accelerate its relative performance to the S&P, especially a month or so ago. Whereas at the early point after S&P sort of rolled over a little bit, that spread broke out, exploded out of a major base, saying, okay, I'm accelerating versus you. That money flow is one factor because it seeks the place that's doing better. And frankly, commodities have been laying on wasteland for 2-3 years, around 100 level on the Bloomberg. So they've really not been going up to attract money yet. I think they will. But gold has continued to advance, so has silver. The other issue is the Federal Reserve. If you go back and examine that event that occurred in October of 2008, now that was a point where gold was into its bull trend already, since 2000 lows at $260. It had advanced up to 1,000 by early 2008. And a lot of that advance occurred while the stock market was starting its bear market because it peaked in October of 2007. So between October, and early 2008, S&P was slumping hard. Gold continued up. But gold decided it wanted a correction in the middle of an ongoing bull trend. It had a very nasty month in October 2008 when the stock market puked 30% that month. But recognize the S&P was already a year off its high when gold said, oh, okay, I'm going to join you for a bad month or so. Everybody thought, oh, if the stock market goes down, gold must go down. First off, they ignored all the history from 2000 to 2007, where the S&P was caught in a range, bear market, bull market, but still in a box, and gold was just lifting off. The correlation is very poor in terms of if the stock market goes down, gold will go down. It's a very bad assumption. Yes, for that month it did, but what happened in November? This is what's so interesting. The Fed started cutting rates actually 1 month before the stock market peaked in October 2007. They started cutting rates in September, but still the market topped. We called it a bubble in hindsight, mortgage-backed crisis, and started down, and they kept cutting rates all the way down, but that didn't work. And by October of 2008, some events had occurred. Like the banks had been going down hard, and they ignored it. They ignored the stock market. Oh, yeah, they did rate cuts, but they didn't do anything else. But after that October collapse, remember, Lehman Brothers actually went under in September 2008. The next month, the stock market collapsed 30%. And in November, finally, the Fed said, oh, gosh, we got to do something else. They looked at the Japanese playbook, and they picked up the QE book, and they employed it. They started QEs. And that was in November. Look what happened then. Well, the stock market continued down hard in November and kept going down till March of 2009. So the QE didn't help the stock market. In fact, from that October close, the big bad month for the stock market, it went down 31% more by its March 2009 low. So QE didn't help over that 5-month period, October through March. Gold exploded in November. It had its October bloodbath, and it took off, and by early 2009 was back to its highs again. The pivot point was when the Fed panicked. Right after the October collapse in the stock market, they came in with QEs, and we know they continued them for a long time. Gold got fuel in its tank and took off. Now, I'm not arguing that's necessary, but I suspect, though the Powell wants to smile and smirk and prance around the press conference and look like everything's good, that bank collapse is getting their attention now. Stock market being down 21% in the S&P to today's low from the recent high, and NASDAQ down, about 30, or not 30, but a lot more than 21. They didn't care, but those banks are down 30% plus, 50% more drop than the S&P. I mean, you can basically flip up any major bank. But 2 examples, and they're not rare, by the way. This percent I'm giving you is not unusual. Goldman Sachs and Citicorp, down 34+%. 34+% since their recent peak. And everybody's looking at NVIDIA like that matters. No, to the Fed, that doesn't matter. What matters is the banks. They delayed back in 2008, and bloodshed followed. They had to see Lehman go under. They had to see a stock market crash. And finally, they said, okay, we're going to do QEs. By then, hell had basically done its thing. They went down 31% more, but still, those bank events happened. And only then did they respond. Bernanke was late. When COVID hit back in 2020, they immediately did QEs again. They weren't lagged this time. And of course, everything shot up. Gold, silver, stock market, and so forth. Gold and silver have continued. But the banks collapsing now, I think, is the headline. It's not even a headline, is the factor that investors better pay attention to. Because Powell can say all he wants to, comfy, about, the economy looks good, and inflation is not quite where we want it to be. Well, hell, if you look at the Bloomberg the last few days, it dropped 7%. Crude oil dropped to lows for a couple of years. Copper dropped a full $1. So a lot of commodities drop. So if they look at that instead of their data that's lagged to reality, they'll realize, inflation's subdued by their way of measuring. which is really a false way. It's money growth is the issue. So the question is, will they do something now because the bank alarm is starting to go off? And when you drop 34% in a matter of a couple of months, I mean, wake up. Something's wrong. And I'm not just talking, it's not just one or two banks here. It's basically all the big banks. So that's what we're focused on right now. And we think that's probably what Powell and his gang are focused on, even though they don't admit it. And the question is, will Powell really sit back and let the banks drop another 10% without doing anything? Or is he going to have a mob of bankers outside his door? Okay. So now gold, monetary metals are pretty smart. They've been around millennia in terms of being money. Okay. And the people who treat silver recently like it's a dog, even though gold's dropped single percentages. Right now I think we're 5% off the high close or something. It's a sneeze compared to what's going on elsewhere. And silver had that collapse last week, which was, really Thursday and Friday of last week was the collapse. It wasn't the whole week. It was just those days. And today we rallied from the low of the day to the high of the day, rallied $2.5, $3 or so. End up closing about $2, $2.50 off the low today. Big reversal in silver. So maybe silver realizes it shouldn't be treated, or some investors realize shouldn't be treated like a commodity. Instead, if gold's not collapsing, why should I? And if we're starting to snap back, and it won't take much to snap back big time. I personally view the sell-off in silver as a major opportunity to buy. It's much like the COVID event. You go back and look at the charts then. It exploded out of there like there was, total error that it made. Anyway, I think that's what's going on. And the question is, will the S&P and the NASDAQ bounce off of our bounce level, which we defined? I don't know whether it's good for a day or two, or maybe a couple weeks, but it's not a permanent low. Silver did something that it's done before, and it's always been a mistake for silver to do it, or an opportunity for those who are smart enough to know that, one, silver is not an industrial commodity. Yes, it has industrial aspects, but it is primarily a money. For 3,000 years, gold and silver have been money. Sometimes silver's been official money. Okay. Silver moves with gold. Go back and look at historical prices. We ran charts in the weekend report showing Bloomberg, crude oil, showing charts of silver and gold going back to like 2022. Go back 3 years or so. Bloomberg, big down from 2022. Oil, big down from 2022. Silver and gold, big up from 2022. Yeah, there's jiggles in between, but the basic trends are totally opposite commodities. So people who sold silver on Thursday and Friday of last week, those 2 days, panicking, thinking, oh my God, the end of the world, stock market's crashing. One, gold wasn't. They ignored that. And they thought, oh, well, silver's with commodities. And so they sold it. Now, was that a correct move? I think you'll find out in about a week. Now, today was an interesting example. We closed $2.5, we traded $3 off the low and closed $2.50 off the low or so. Big reversal day, despite commodities breaking hard, crude oil, Bloomberg, et cetera. So I think it's a mistake, and I think silver will slingshot back in line with gold. And in fact, I think it'll outpace gold.